Hey guys, it's Erica Hill West here with Lending Path Mortgage, your mortgage go-to gal. I've been in the mortgage industry for over a decade. I host a local radio show here in Columbia, South Carolina, and I manage a team of 5 loan officers. It's my passion to help people get into homes and become homeowners. I know a lot of you are thinking it's January 2022. What are interest rates going to do? Hold on, let me grab my magic ball. Well, while I don't have a magic ball, I can give you all the tips and trades of projecting what is going to happen in the market this year, what are the benefits of what's going to happen to interest rates, and why any of you that want to purchase a home need to listen up. So, what are interest rates going to do in 2022? Many of you know or have heard from family, coworkers, friends that interest rates have been really low for the last nearly 2 years. Well, while purchasing may not have been at the right time for you, you may be preparing to purchase in 2022. And the number one question that everybody has on their mind are, what are interest rates going to do? Well, today I'm going to give you the scoop. Right now, in January 2022, in the first week and a half of the year, we are seeing interest rates on the rise. Now, don't let that scare you. So in the last almost 2 years since the onslaught of COVID, interest rates have been artificially low. What that means is the Federal Reserve was pumping money into 10-year Treasury bond to keep those interest rates low. We saw inflation in supplies, materials, gas, cost of living, all those things were on the rise. And so the interest rates were forced to be low to keep the economy and the market stable. So what has been happening over the last about 6 to 8 months is the Federal Reserve keeps meeting and they discuss when they are going to let inflation equal out the interest rates. So while they're just having discussions, they have put some dates in motion. Right now, they say that they plan to have a rate bump in the spring or summer of 2022. With the announcement of that, investors that invest in the 10-year Treasury bond began to pull their money out just from the news that the feds were going to start to let interest rates kind of regulate themselves. So what we saw in the last 10 days is interest rates went up. Now, is this anything to be concerned about? No. We are still at historically low interest rates. And like I said, we knew that those interest rates that we had for the last 21 months were artificial. We knew that they weren't going to be here forever. So the good news is interest rates are still low enough for you to be able to capitalize and purchase the most home that you ever have been able to. So interest rates going up. When I say they're going up, people have a misconception on what the range is when we say rates are going up. For example, we did have a rough week last week. I don't know if any of you watch the stock market or cryptocurrency, but those were impacted too. So last week we had a rough, volatile market. We saw a lot of movement. Now, here's the good news. Rates are still in the 3s. That's incredible. I can tell you how incredible that is because I remember in 2008 when rates were in the 6s and people were ecstatic. In fact, I have some homework for you. Go around to those that you know in your family, friends, coworkers that have owned homes since the 70s, who have been homeowners since the 70s, and ask them what their first mortgage rate was. I guarantee you most of them will tell you statistics that will boggle your mind. Over 10%, over 15%. So rates under 4, rates under 6 are incredible. But here is the thing you need to know. There are a lot of ways that people can quote and misquote rates. So you need to listen up very carefully. A lot of times, if you go online to a .com or an online lender, or even just a simple search, what are interest rates today? They are quoting you the best credit score with the most optimal down payment. The percentage of people that fall into that category are minimally small. Most people have good to average credit, and they're putting usually the minimum down. So are you going to get that interest rate that you're seeing from just a worldwide search? Probably not. Also, if you use one of those services to put in an application to get a rate quote, a lot of times because you either haven't done this before or you've only done it a handful of times, you don't know what you're looking at. There are hidden fees and discount points and origination that are hidden in there that you may not have knowledge of that are helping you get a competitive rate. So if you're fixated on rate and all you see is that low rate, you may not know that what you're getting is not the best deal out there. The best thing to do is to talk to a mortgage professional on the phone about what interest rates are doing, have them do a simple analysis of your credit, your profile, your purchase capacity, and tell you what that looks for you right now. Also understand when interest rates are quoted, they're good for pretty much that minute. You also can't lock into an interest rate until you have a contract on a house. So starting your shopping process for interest rates when you're going through the initial pre-qualification may not be the best time to do that. So just keep in mind that when you see these shock sticker low interest rates, you're usually paying for it. And if you don't know how, I'm sure we will talk about it in another episode. So make sure that you stay tuned, hit like, and subscribe. So if you're interested in finding out what interest rate you could get, you can reach me at www.ericahillwest.com. Likewise, in 2022, we're growing our team. So if you're currently in the mortgage industry or you've been thinking that you want to get into the mortgage industry, please contact me as well.